Hello, financial adventurers and savvy investors. Welcome back to the Investing Iguana, your trusted guide through the twists and turns of the investment landscape in Singapore and beyond. I'm Iggy, and today we're diving into an intriguing story in the world of real estate investment trusts. The spotlight is on Paragon REIT, which has recently been stamped with a buy rating and a target price of $1.05 by DBS. But what's the buzz all about? In this video, I'll unpack the reasons behind this bullish outlook, from distribution surprises to strategic asset management. Whether you're a seasoned investor or just dipping your toes into the REIT waters, you'll want to understand why Paragon REIT is turning heads. So, if you're ready to unravel the secrets behind this top pick, you're in the right place. Let's decode this together. The DPU surprise. Paragon REIT, a real estate investment trust, has recently announced a distribution per unit, DPU, of 5.02 Singapore cents. Now, this might seem like just another number, but it's actually quite significant. This figure has exceeded what market analysts and investors were predicting, making it a pleasant surprise for those who have invested in Paragon REIT. The payout ratio, which is the proportion of earnings a company pays to its shareholders in the form of dividends, stands at an impressive 105%. This is not a figure that was pulled out of thin air. It's a calculated number that has been influenced by certain tax adjustments. These tax adjustments are not something that happens every day. They are the result of strategic financial management and, in this case, they have worked in favor of Paragon REIT. These adjustments have allowed the company to distribute more than what was initially expected to its investors. In simpler terms, thanks to some smart tax strategies, Paragon REIT has managed to give back more to its investors than what was initially anticipated. This goes to show the importance of effective financial management and how it can benefit both the company and its investor. Rent rises and the redemption move. Paragon REIT's assets in Singapore, specifically Paragon and Clementi Mall, are showing some impressive figures. They have reported strong reversionary rents of 12% and 9% respectively. Reversionary rent is a term used in finance to describe the increase in earnings from rent renewals. In simpler terms, it means that when the lease agreements for the properties were renewed, the new rent was set at a higher rate, leading to increased earnings for Paragon REIT. Now, let's talk about a strategic move that Paragon REIT is considering. The company is thinking about replacing perpetual securities with debt. Perpetual securities are a type of security that has no maturity date. This means that the company is not obligated to return the principal amount to the investors. However, they are considering swapping these securities with debt, which will have to be repaid at some point. This move could impact their gearing ratio, which is a measure of a company's financial leverage. It's calculated by comparing the company's level of debt to its equity. If Paragon REIT goes ahead with this swap, their gearing ratio could increase to about 38%. This means that the company has a higher proportion of debt compared to its equity, which could potentially increase the risk for investors. However, it could also mean higher returns if the company's assets continue to perform well. A closer look at the financials. Let's take a closer look at the financial performance of Paragon REIT for the fiscal year 2023, FY23. The company saw a slight increase in its revenue, which grew by 1.8% compared to the previous year, reaching a total of 289 million Singapore dollars. This growth, albeit small, is a positive sign, indicating that the company's operations are generating more income. The net property income, NPI, which is the income generated from the company's properties after deducting property-related expenses, also saw a similar increase. It grew by 1.7%, closely following the trend of the revenue growth. The total cash that was available for distribution to the investors amounted to 142.2 million Singapore dollars. This is the money that the company has decided to give back to its investors in the form of dividends or other distributions. However, it wasn't all smooth sailing. The company faced higher interest costs, which are the costs associated with borrowing money. Additionally, there were some losses due to currency translation. This happens when a company's financial statements, which are in different currencies, are converted into a single currency for reporting purposes. Despite these challenges, the full-year distribution per unit, DPU, managed to exceed expectations. Operational highlights. In Singapore, Paragon REIT is demonstrating strong performance. Specifically, Paragon has achieved an 11.6% increase in rents upon lease renewal. This means that when the lease agreements for the properties were renewed, the new rent was set at a higher rate, leading to increased earnings for Paragon REIT. Similarly, Clementi Mall also saw a healthy rise in rents upon lease renewal, with an increase of 8.7%. However, the situation is different for their Australian properties. Properties like Westfield Marion and Fig Tree Grove have experienced a decrease in reversionary rents. This means that the rents set upon lease renewal were lower than before, leading to reduced earnings from these properties. These operational highlights provide valuable insights into the performance of Paragon REIT's properties in different locations. It shows that while some properties are performing well and generating increased earnings, others are facing challenges. This information can be useful for investors and stakeholders to understand the company's operations better and make informed decisions. Occupancy and valuation vitals. Let's examine the occupancy and valuation details of Paragon REIT's properties. The overall occupancy rate, which is the percentage of all rented or leased spaces, remained robust at 98.1%. This high occupancy rate indicates that a majority of Paragon REIT's properties are rented out, contributing to its revenue. However, it's worth noting that the Australian malls were slightly behind in this regard, indicating a lower occupancy rate compared to the overall average. In terms of property valuation, Paragon and Clementi Mall in Singapore experienced a 2% increase in their valuation compared to the previous year. This increase in valuation is attributed to a stronger cash flow, which means that these properties have been generating more income, thereby increasing their worth. However, the Australian assets of Paragon REIT saw a decline in their valuation. This decrease is attributed to a cap rate expansion. The cap rate, or capitalization rate, is a real estate valuation measure used to compare different real estate investments. When the cap rate increases, it implies a decrease in property value. This could be due to a variety of factors such as market conditions, property location, or property condition. Capital management and future moves. Paragon REIT stands out in its sector with one of the lowest gearing ratios, which is at 30%. The gearing ratio is a measure that compares a company's borrowed funds to its equity. A lower gearing ratio indicates that a company has less debt compared to its equity, which is generally seen as a sign of financial stability. This showcases Paragon REIT's effective capital management. The company also ended the year with a high interest cover ratio, ICR. The ICR is a measure that determines how easily a company can pay its interest expenses on outstanding debt. A higher ICR indicates that the company is better positioned to meet these obligations, which is a positive sign for investors. Looking ahead, there's talk of Paragon REIT refinancing their 300 million Singapore dollars perpetual securities in August 2024. Perpetual securities are a type of security that has no maturity date, meaning the principal does not have to be repaid. However, the company is considering refinancing these securities, which could involve replacing them with another form of financing. This move hints at strategic financial planning for the future. And that's the scoop on Paragon REIT. With DBS waving the buy flag and a promising outlook, it's an interesting time for investors watching this space. From its impressive DPU performance to strategic financial moves and solid operational highlights, Paragon REIT showcases the makings of a potentially lucrative investment. But as always, the financial world is ever-changing, and staying informed is key to navigating it successfully. If this deep dive into Paragon REIT has illuminated a path for your investment journey or sparked your curiosity for more, don't forget to hit that like button. And for more insightful explorations into the world of investments, make sure to subscribe to the Investing Iguana. Your engagement fuels our journey into the financial wilderness, so share your thoughts, questions, or topics you'd like us to cover next in the comments below. Until our next financial adventure, stay savvy, keep investing smart, and continue to thrive with us. Thanks for watching, and I'll see you in the next video.